What's up, guys? It's Tyler back with BodiesXWix.ETH. I haven't been in a video in a long time because I haven't had the ability to actually get live stream. So, uh, what I'm gonna do, I've actually been switching over to instead of forex, crypto, things like that. I've been doing more futures. Actually, what I can do is I can show you, give you a link anyway to Apex, where I have been going to facilitate my futures trading. And give you a direct link. It'll be an affiliate link. Spread the word. You get people to sign up. I think they also get some kind of a discount bonus. I'm not exactly sure how it works. You'd probably have to read up on the rules. I'm not really here to talk about all that. I'm mainly here to talk about what I see in Nasdaq. So I'm just going to jump right into it. It'll be a short video. I won't waste a whole lot of time. Usually my videos are like 2 or 3 hours of me rambling. I don't want to do that. I just want to get through the video, and hopefully you guys understand where I'm coming from. So I'm looking at Nasdaq right now on the weekly that is on your screen. And you can see I do have a fib. The fib is starting somewhere around just below 14,000, somewhere around the 13,750 range. The reason it's starting there is because it is the last low before breaking the high. In the middle of the screen, you can see the blue box that's going from left to right, where the green. This is on the weekly, right? So it's one weekly candle. The last weekly candle, I think that goes back to September of last year, maybe even August. That has a little spike before it drops down and then rises back up against it. That creates what's called the breaker, right? So that would be a little higher high, and the higher high is what runs through it, and it is now at its highest point. So before that, the weekly candle over here back in August, September of last year, that is what creates that breaker. Now, why is that important? Well, because it has the potential to draw back to that breaker, and that's what we're looking at now as far as technicals are concerned. Right? So no matter what people tell you in the market, if it's buying pressure, they think certain companies are going to do this or that. A lot of it doesn't matter. The main thing you need to know is that markets are manipulated. Right? As long as you know that the markets are manipulated, and a lot of it's based off of technicalities, based off of technical influence, then you know what the big banks, the big traders are doing. Which are also what some of my indicators are for. You can see the one in the middle, which is called the commitment of traders. That tells you what size or what type of trader is doing what, how they're influencing the market, basically. And as you can see, as some of them, especially the green ones, are going higher, right? It is dropping. So they're betting on it. Basically, they're actually going ahead of time, putting in their longs ahead of time before it even gets there. And then as it drops, they will drop their longs and get down to net shorts before it gets net short. So that's a whole another tire discussion in its own. So that's nothing I can explain to you in a short video. But just know that it is an indicator to look at, and to also investigate yourself, do some more research and whatnot. All right, so as you can see, like I said, it has the potential to pull back to that area. And what I am looking at is within that fib, right, that I have pulled from that low point to that high point, is anything below the 62% down to about the 80%, or sometimes the 88.6. That is where you're most likely going to see the smart money buy, right? Because they will force the market down toward there, and then once it gets toward that area, then they're potentially going to start picking up orders, right? As it is now in what we call discount mode, right? Anything below the 62% of this Fibonacci sequence is in a discount, so it'll possibly stay below this. It could just even quickly get below it As it quickly gets below it, they rack up a bunch of orders and then take off the other way. Or it could stay, consolidate, make you think it's going to drop, and then all of a sudden it rips upwards and goes, the other way to where you think it's going to drop. So always know that the market's manipulated, and try to think the opposite of maybe of what you've been taught. If you've been taught retail theory all your life, this is considered smart money concepts, right? Which I contribute most of my ideas to Inner Circle Trader. However, I have developed some of my own theories as well. But a lot of this I'd have gotten to Inner Circle Trader. If you want to know more, go to his channel. He's got a lot more than I could ever teach you. All right, so now we are jumping over to the daily. This is basically just the right side of the weekly that I was showing you. Now, as you can see that Fibonacci sequence, it is now, you can see that the current price, this is Sunday, August 20th, right? The current price is just right at that 62%, so which is just at that discount level. There was, as you can see, a breaker just below that to where it went I moved it just a little bit. It should have been locked into place, but that is my fault. You can see it went from low, high to lower, high, low to higher high. So that low became a breaker point. Generally, when that happens, it does reach to the bottom of that breaker. Then it will reach to the top, and it will bounce off the top and then reach lower. So don't be surprised if you see at the start of the week start running up higher to touch the top of the breaker and then start dropping, right? And then that all kind of coincides with kind of the weekly trajectory, right? So the weekly also has its own kind of fixated way of how the market may move, right? So Monday, Tuesday, the market may move a certain direction, get you thinking it's going to move a certain direction, then it all of a sudden could turn, later in the week, depending on what is going on with the economic situation, the economic numbers. This week we have Jackson Hole starting on Thursday, I do believe. So the volatility this week is going to be very, very insane, especially once we hit later in the week. So if you are a new trader, I would not be trading anytime Thursday or after. If you're an experienced trader, you know what I'm talking about. Jackson Hole is something that can rip you to shreds if you do not know what you're doing. You can also get lucky and make hundreds and hundreds of thousands of dollars if you know what you're doing. But right now, I just want to focus on what could possibly be happening during the week, and Jackson Hole could possibly take us there. And that's the thing, is that the technicals will show us kind of where we're going. The news will get us there quicker. This is the way I have seen it, the way I've experienced it. I've been doing this for a couple of years, and a lot of people think that that is what drives the price to what it's going to do. To me, that's not necessarily been true. To me, I've always seen the price heading toward that direction, and then the news gets it there quicker. If you ever go to my Tradingview page, so if you look up BodiesXWix on Tradingview, and you can find, actually a Bitcoin call that I made back in, I want to say September of last year. And it didn't come to fruition up until December, I want to say, of last year, to where I said it was going to hit 15,800. Everybody thought I was crazy. Guess what? It hit 15,800. So I'm not trying to say I'm a genius. I'm not trying to say I know everything about the market, but I am trying to let you know, just because of these principles that I have been taught, this generally does happen. All right. So now, right now we are sitting just above that 61.8, that 62% area. Like I said, beginning of the week, we could see it start to move up, right? And then start dropping down into that smart money buy area, right? In that smart money buy area, there are what is called a weekly fair value gap, right? The weekly fair value gap is where basically, or it could be a daily fair value gap as well. Not for sure which one it is because I don't think I have it marked, or I cannot see it marked, to be honest. But it's kind of it's an imbalance, right? So it is where one candle, right, does not, and there's two candles on each side. It's to where the wicks do not touch each other. If the wicks don't touch each other, that means that there's an imbalance. Price always likes to go toward those imbalances, right? And it will fill those imbalances. It will fill those going down. It will fill those going back up as well. So what I technically see happening, and that's where I'll be going to this next chart here, is that'll be the trajectory, right? As I see the price going down into that weekly imbalance, right? And possibly even getting lower than what I have marked out in the yellow. The yellow is the path that I have, right? So it could take a minute for it to get down there. That's why I have two paths. One, it could go straight down. Another, it could go up and then kind of like consolidate for a little bit before it goes back down into it. And it could even get lower down into that order block, which is why I have the red extended down into. Let me see if I can't pull up the price here. I made a safe price of, looks like it's about 13,200. I want to say it's more of a institutional level. So there are different institutional levels, generally starting at the zeros, the 200s, the 500s, the 800s, right? All of those are institutional levels. So if you see the price getting near those, usually there are sweeps or a run, past those levels. Or it could be a stop just above those levels. So I think I do have, let me see here, the stop level at about 13,100, and I think mine says 196. So I would technically stop it probably just below that 13,200 level. Because if it does get close to that level, it could sweep it. So you may want to think about it. And this is not financial advice in any means or anything. This is just my experience in the market, right? So this is just me explaining how smart money concepts work and what I've seen happen in the past, right? So I would see that price. I would see the price drop down, possibly to 13,100 and something, because it would sweep that 13,200 level. But I don't think it would get down to the 13,000 level. I think that's a little too low. Actually, it dropping down to the bottom of the breaker, which the bottom of the breaker, I believe, let me see here. I'm in a long position now, right? So I'm clicking the live chart as we speak, even though you're only looking at a picture. Let me see here. Looks like it says about 13,400. So we're somewhere around 13. Yeah, so it could get just below that 13,500 level. That would be the bottom of that weekly breaker that I was talking about that started in September. It could get to the bottom of that. But I would start my entry level, right, that's about halfway through that fair value gap, which starts around 14,500 something, 14,600 something, around there. All right, and then if you notice it, or if I would notice it, I should say, continuing to get lower, then I would try to reassess the situation. And as long as the analysis continues to fit what I am looking at, then I would continue to add longs, is what I would do personally, until it hits, unless there is something dramatic that would happen that would make me rethink my analysis. Then, of course, I would just jump out of the trade entirely, say, oops, I lost it, whatever, and then, continue on. Sometimes that's what you have to do. Otherwise, I would just stick to what I was doing, and if it dropped below my stop loss, then it hit my stop loss, right? But this is kind of what I see happening. I know a lot of people are talking about market crashes, things like that. I don't necessarily see that happening. I just see all these technicals on the screen, and I see the reason why it's pulling back. And it's pulling back, for one, to fill those, those imbalances that it wants to fill. That's just always been that way. Anytime I've seen the market, kind of pull back, it's because there's been an imbalance that it wants to fill. And it will fill that imbalance and generally move on, or fill the imbalance, hit a breaker or something like that below it, and then we'll see it continue to move on. We are nearing, just past, quarter two. Probably getting near the end of quarter three whenever we may start seeing this start to rise up again. And hopefully by Q4, we could be at the top, making a new high once again. So that's what I see happening. That's all I got for you guys. And again, I will talk about, I won't talk about, but I will drop a link about Apex Trader in the description of this video if you're interested in learning more about trading futures rather than trading crypto or trading forex or things like that. But yeah, that's what I got for you guys today. I know it's been a while since I've dropped the video, so thanks for hanging in there with me. Hopefully I can bring some style of videos like this to you in the future. It may not be as complex as what they used to be. Hopefully they'll be shorter, and hopefully they'll be understanding as well. I still have my website, BodiesXWix.ETH. If you're interested, there is a form you can fill out. And let me know if you're interested in basically a private mentorship if you would like, or maybe just a one-on-one session. Or if you're interested in just learning about, specific things, like order blocks, breaker blocks, things like that. Just let me know what you're interested in. If you can't figure it out, maybe I can just do a quick, email back to try to help you. If it's more complex, maybe we can, chat about it on Zoom or something like that. Who knows? I'm open for most things. So, thanks again, and good luck and good.